Alright, man, we back with another video, man. Alright, look, so today we're going to be talking about the fractional nature of the market. I don't know if you guys have seen videos about this. Probably you had if you are up with smart money and Wyckoff and everything like that. But the market is very fractal. So fractal, I'm gonna show you on one pair how fractal the market is. Like, you're gonna see the same thing over and over again, and that pair is gonna be GBP CHF. I am creating a Discord group, a Discord server actually, with many channels in it, where it's gonna be like community chat and all these different things, trades, and a library and all sorts of type of stuff. I'm working on it right now. Once that is finished and everything is complete and I've gotten everything set up, I'll post a link on here. I'll let you guys know, and we'll catch up on that as time goes on, and I'll just let you know. Right now I'm working on it, so stay tuned for that. The fractional nature of the market is that if I didn't tell you that this right here, this distribution setup right here, was a 30-minute, or if I can go to 15-minute, you'll see it more clearly, a 15-minute distribution, I could say that this 15-minute distribution was a 4-hour. If I hide the time frame and I say this is a 4-hour, you would have no problem trading this. You feel what I'm saying? So don't get caught up in time frames, because time frames are only showing you what price is doing at that time. Price, I think I've said this before, price and time are correlated, but they're not correlated in the way that you think. Like, time is just recording what the price is doing. So if something's happening at the 15-minute, there's no reason for you not to trade, the 15-minute time frame. The time frames has nothing to do with what the setups are looking at. You feel what I'm saying? So just because, like, that's why you can trade, like, I can go to 9-minute, 8-minute, 7-minute, 6-minute, because all they're doing me is showing me what price is doing in that time. It's showing me the candles that's happening at that time. That's all it's doing. So if you're looking for that's why I can never really tell you exactly what time frame to use. I can't tell you to strictly look on the 1-hour time frame, or strictly look on the 2-hour or the 30-minute or 15-minute. You know what I'm saying? That's why one thing I always say, when you're looking for schematics and setups and Wyckoff, look at all the time frames. Like I was using the 30-minute, right? Let me go back. I was using the 30-minute, right? This 30-minute distribution, it looks okay, but the 15-minute looks better. So why wouldn't I use the 15-minute over the 30-minute? You see what I'm saying? So it doesn't matter. Use the time frame that looks best for you. Just because this was okay on the 30-minute, the 15-minute looks better. So why wouldn't I use the 30-minute? Why wouldn't I use the 15-minute? You feel what I'm saying? So use the best time frame that shows you the best price action. Okay. All right. So this was actually a little bit of what I was gonna show for the fractional nature, but we'll get into that more. All right. So boom. Let's say we have this, right? We have an accumulation, right? Let's say this was a 4-hour accumulation. So I'm just put that 4-hour accumulation, right? Boom. And we have our 1, 2, 3 drive, and this right here would be our spring. This right here would be our spring, correct? Now let's say we zoom into this spring. Let's say I go down. Let's say technically I went down time frames and I zoom into this spring. What you would see inside of this spring, you're not going to see it all the time, but look out for it. You'll see another accumulation inside of this spring. And that's how people get those sniper entries and everything like that, because the market is fractal. So you'll see what you see on the higher time frame on the lower time frames. Okay, so that was my best way of explaining that, and I'm going to show you an actual example of that right now. So always remember, what you see on the lower time frames, you're going to see on the higher time frames. Okay, what you see on the higher time frames, you're going to see on the lower time frames. The market is fractal. All right, watch when I show you this pair right here and how fractal it is, you'll be surprised. All right, so the same distribution I was looking at. We're looking at this distribution right here, correct? All right, this is our UTAD that happened right here. I put UTAD with the question mark because at the time I was looking at it, it didn't confirm it, but now it's completely confirmed. So it is a UTAD. But one thing, let me zoom in into this UTAD like I did with the spring. Let me zoom in into this UTAD and let's see what happened on the lower time frame. So I'm gonna use this replay mode real quick. And this is live price. Like this is a trade that I'm looking at. I mean, you guys. I mean, I don't. By the time this video comes out, I don't know if it'll activate or not. But if it's not activated yet, you guys can look at it. You guys can take it or whatever. But let's go on the 1 minute. What do you see on the 1 minute? It's basically another distribution. Another distribution on the 1 minute. Now this distribution right here isn't as clean as the overall distribution, but this is a distribution. Buying climax, automatic rally. All these here are just secondary tests. All these, even this high right here, just secondary tests. All you have here is you have an up thrust. You have a type 2. So you have your buying climax, automatic rally. You have your secondary tests, and then you have your up thrust. You have your breaker structure. You have your last point of supply here, and this is where you take your trade entry depending on like where you would have set your limit. And then the market is gone. Sniper entry. Simple as that. Okay? So that's the fractal nature of the market. The market will do, and let's look at this. All right? This is the overall schematic, right? This is the overall schematic. Look what happened here, bro. Distribution inside of our up thrust. Distribution, buying climax, automatic rally. You have an up thrust here. You have your secondary tests out here. You have your up thrust here, and you have your last point of supplies. Got your breaker structure, test, last point of supply, gone. You'll see, like, bro, you will see everything connect with each other. All right. So don't get stuck on one time frame. All right. Look at multiple time frames. You know, just look at multiple time frames. See what time frame shows you the best price action for that schematic, because everything you see on the higher time frame will happen on the lower time frames. All right. I'm not gonna make this video long because it doesn't need to be. Let me delete this and let me go over this setup real quick. One thing I noticed about this pair, this market, is its distributions are very alike. And that's why I wanted to go over this specific market. I'm going to go on the 15-minute real quick. And I don't know if some of you caught it yet, but let's look at this distribution right here, right? This distribution right here reacted off of another distribution. That's why I have this this red box here indicating this is a supply area. So I knew the market was going to react inside this area, and that's why I was watching the market inside of this. When it hit this, I was watching it. I was already predicting this distribution that was happening, but I wanted to see that UTAD break this low. I was trying to trade the little schematic inside of there, but it didn't really hit my entry. I was going, my entry was a little higher, like the fill of imbalance that I showed, so it didn't really tap in. But I am looking for another entry if it wants to give it. But let's look at this distribution right here, and then let's look at this distribution right here. All right, now this one's a type 2. This one's a type 2. You have your buying climax, automatic rally, secondary test. This one is not as clean as this one, but this is still a distribution. But look how this distribution and this distribution resembles each other. Even though I didn't mark this out like this, I could tell this was a distribution. All right, I didn't mark it out like, but if I did, you would see that they resemble each other. That's not the crazy part. I'm gonna keep going back. Look at this one. Same thing, isn't it? Buying climax, automatic, secondary test, up thrust, push to the downside. Look, distribution, 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 and all these three distributions almost look damn near the same. All right, so let's go back some more. Let me see. I don't know if I showed this already. I mean, there's plenty more examples inside of here, but I know like a couple more clear ones that I've seen already. I just gotta find it first. All right, I see it. All right, look at this distribution here. All right, and then I'm gonna zoom out, and then we look right here. Basically the same thing. You have this consolidation indicating a range in the market. I'm gonna try to zoom in so you guys can see it. We have this consolidation indicating a range in the market. Then we have our candle that goes to the upside, either during, last video we talked about our time and price, right? So we have this candle that goes out at a specific time to take out all these people that's selling. So even though they wanted to sell, they're going to take out everyone that's selling already, so they can get the best position and they can get the best area, the best price for their money. So they took out everyone that was selling, took out everyone that was buying, went back up, tested this buy to sell, and went to the downside. That's basically what a distribution is. All right, so they made a range, took out sellers, took out buyers, went to the original place that we were going to go. All right, and if we mark this out, this is a clear distribution. All right, we don't have to do that. But let's look at what the same exact thing they did again. Made a range, took out sellers, took out buyers, went back up, tested, and went back down. Look, it's the exact same thing over and over again. So you see how these two distributions right here resembled each other. They look the exact same thing. And that's one thing I'm starting to notice about this pair. That's why I wanted to show this specific market, because this is a clear representation of the fractal market, like how the market does the same thing on the same time frame, on like different time frame, but they're doing the same thing. Like if you go to the 1 minute, you'll see this on the 1 minute. Like, bro, it's the same thing over and over again. So now keep those in mind, right? Keep these two here in mind, and then when we go over here back to our original place, we see a series of it happening. Distribution. This distribution came and reacted off of this distribution, distributed again. This distribution came and reacted off of this distribution, distributed again. I would not be surprised if we get the exact same thing again. I would not be surprised. Like, I'm telling you, I would not be surprised if we get the exact same thing again. So that's basically what I wanted to go over. I think this was like the clearest market that I could show this fractional nature on. Like, I don't see any of the markets giving you three clear distributions the exact same way. Like, these did the exact same thing. They look damn near identical. Like I said, I wouldn't be surprised if it happened again. So I wanted to keep this specific video. I wanted to keep this video simple, and I wanted to keep it short. I didn't want to put too much emphasis on it. But if you guys have any like questions of like what you want to see, like specific videos that you want to see, that topics that you want me to talk about, go ahead and drop it in the comment section. I'll gladly make a video on it. I'm looking to make more content for you guys, and just help you guys out with like the Wyckoff and everything like that. So yeah, just let me know.